AMD, congratulations all AMD shareholders out there. Look at this stock's momentum, up almost another 4% here today, up $23,000 in the public count on AMD. Congratulations once again to everybody that was buying this stock throughout this year. I mean, obviously we have shares at $91, $94 from that April dip we had. What an incredible buying opportunity. Now up $333,000 in the public count alone on these AMD shares. It continues to perform in a tremendous way. Public count, new all-time high here today, getting very, very close to that $4.1 million mark. I'm sure there's a lot of you guys watching out there that are at all-time highs, are very, very close at this point in time. Just last week in the private stock group, my private stock group, we had seven people hit $1 million plus in their portfolio. And then just today, my wife had me sign up. These 15 people just hit $100,000 plus in the past week in their portfolios. Incredible to see all the success out there, obviously, right? Three core subjects I want to speak about here today in this video. Okay, first one is I want to give a warning on taking profits too soon on a stock. This happens often, and I'm going to explain why it happens and how you can avoid this situation, especially when it comes to life-changing stocks, okay? Second thing is, why corrections don't come when everybody wants a correction. I think that's going to be a very important subject to speak about in this video. And the third subject we'll get into in this video here today is AMD. There's some monumental changes going on in regards to AMD's business model and stock price right now that I need to explain so everybody understands this. And I wanted to try to put it as simple as possible. So I really wanted to, how could I conceptualize to everybody, what is actually going on with AMD right now and why it's so big and why this stock, there's just, relentless buying in the stock day after day. Okay, so we're going to get into all that. There's only one thing I need from you guys. If you could please just hit that like button on this video, that little thumbs up button. If you could just make that icon glow, that means the world to me. That lets me know that you enjoy my content, seeing all my videos. Additionally, if you want to see more of my videos in the future, make sure you're subscribed to my channel. If you're subscribed here, YouTube will show you my videos more often. If you're not subscribed, YouTube might not show you my videos next time you come on YouTube, okay? So definitely want to make sure of that. Additionally, for anybody that's looking to join my private stock group, it's been overwhelming demand this year, and it's been incredible. But starting January 1st, we're going to limit, basically, you got to have at least a $100,000 net worth to join us in there. So there's going to be a huge limit put on. I'm trying not to have this massive influx of people we've had in 2025 in 2026. So I'm definitely going to cut down on the amount of new members we accept in 2026. So if you want to get in there, you better do so now. That will be the pinned comment down there. That's access to all my course curriculums, a private Discord chat, exclusive weekly videos from me, all the moves I make, my $4 million plus Fidelity account, the public account, all that good stuff. And additionally, we just launched our new lifetime access member card. It's beautiful. So on top of the 1000X card you get, and then the regular Steel membership card you get, now if you join on a lifetime basis, we send you that card as well. It is gorgeous. I absolutely love it. And I got it right here with me. It is right here. I keep it in the plastic, okay? It's too nice to even take out the plastic. So, and then you get your regular cards as well, your Steel membership cards, 2000X and to the private group, okay? Alrighty guys, and that will be pinned comment once again if you're looking to apply to join us in there before that change happens. First one up here, warning on taking profits too soon. Alrighty, so this is a very important subject because this could be the difference between you making life-changing money in the stock market or underperforming the stock market or doing bad, okay? Listen, when I first got into the workforce, okay, my first official job was working at Einstein Bagels, cleaning dishes in the back. Then from there, got a job at Walgreens, okay? Okay, get this job at Walgreens, then I get bumped up to $8.75, and then I got bumped up to $9.10 an hour. Now I was so thankful for that, so thankful. Oh my gosh, I got bumped to $9.10 an hour. So, wow, I'm so fortunate for that, right? Why was I so thankful? You might look at it, $9.10 an hour? It really comes down to, I didn't know my own value. I had a lack of experience. So if you don't know your own value and you have a lack of experience, whatever you can take, you'll take it, right? No different than if you don't know the value of a stock, you're going to take whatever you can get. If you buy into a stock and it goes up 5%, right? And I don't know, you make a few $100 on that, you're so thankful. You're like, oh my gosh, I'll gladly take that profit. So people take profits very quick on stocks when they don't know how to value them, right? And when they have a lack of experience, they'll be happy with a little quick gain. And I was the same way when I first got in the market, right? When I first got in the market, if I made 10% on a stock or 20%, I was like, oh my gosh, I just made 20% on a stock. Sell, right? Because it's just you're not used to that. You're just thankful. You're like, I'll take whatever I can get. If I can get 20% on a stock, that's amazing, right? And then I would see those stocks go on over the coming years to go up another 50%, 100%, 200%, 500%, right? And I'm like, why? Why did they do this, right? Because I didn't know how to properly value them, and I had a lack of experience. And so you take profits way early on stocks that have great long-term trajectories, right? Same thing. When I was 25 years old, I started my real estate marketing company out here in Las Vegas after I moved to Las Vegas, right? And I would price jobs at $99. I would do a whole community tour with my drone. No one was recording with drones back then. I bought a super high-end drone, would fly it all over a community, record all this footage, edit all the footage, put in all the branding for them, all for $199. Somebody else would charge $1,000 for that, but I didn't know my value. I just knew, like, this is what I think it's okay. And so I would go ahead and do it, when really I could have got $1,000 for those same exact videos, right? I was new to a space, so I didn't know my value. And if you don't know your value, you're going to take whatever you can get. And the same exact thing happens with stocks, right? Palantir is a great example. Palantir stock. I wasn't the only person that bought Palantir for $7 in 2022. There was other people as well. Plenty of people. A lot of retail investors, traders bought Palantir at $7 in 2022. Some even bought it in the 6s. Some bought it at the 8s, right? And then Palantir starts to go up. It starts to go on its run. People said, I'm going to take my profits at 10, so they sell out. Other people said, you know what? No, I want more than that. I want to double up. I want to go to 15. When it gets 15, I hit my double up. Boom. And you got to understand, you buy a stock at 7, it goes to 15, you double up your money. That's all the money in the world. Especially if you're a new investor, you're like, I just doubled my money on this stock? Are you kidding me? In a matter of 6 months, 12 months, 18 months, whatever the time frame is. Like, I'm taking my profit. Then there's people taking it at 20, 25, 30, 35, 40, right? Today, Palantir is over $180 a share. Over $180 a share. Imagine you sell Palantir at 15, you doubled your money. You bought at 7 something, you doubled your money when it went to 15. It's an amazing feeling. But let me ask you this very important question. How do you think that person feels now? That they sold at 15, all to watch it go up another 10x plus. Now, somebody like myself looked at Palantir at 15 and was like, the stock is still significantly undervalued based upon where I see the growth rates going, based upon where the balance sheet's at, the income statement, where I think the margin profile is, right? So I looked at Palantir at 15, I'm like, I have no interest whatsoever in selling these shares, right? Absolutely none. I was like, okay, we doubled up our money, but like this stock has a long runway of growth that's way past $15 a share, right? There's a famous saying in the stock market, and kind of in, let's call it money game in general, no one ever went broke taking a profit. First off, true. No one ever went broke taking a profit. 100% true. But didn't some people have massive regrets? You sell out a Palantir at 15 and then you watch it over the next 2 years, 10x, over 10x. That's gotta hurt. Because you missed out on an opportunity. You made good money. You doubled up your money, you made good money. You 10x plus your money, you made life-changing money. You put $100,000 in Palantir in 2022, right? You double up your money, that $100,000 goes to $200,000 at $15, right? You feel great. Listen, if you just stayed in Palantir, that $200,000 is now over $2 million. Over $2 million. There's a slight difference in the lifestyle you can afford and how you can grow your portfolio over time between $200,000 and $2 million plus dollars, right? A massive difference. So though this is true, no one ever went broke taking a profit. Yeah, but you could also severely underperform the market over time by doing stuff like that. You can cost yourself life-changing money. The type of money that would let you retire early, live in the home you really want to live in, buy the car you really want to buy, right? Have the sort of health care you really want to have, be able to provide for your kids the lifestyle you really want to provide for them, be able to maybe retire your parents if that's a goal of yours, right? All these things, like give to charity, all this stuff that the money ends up producing, that can be the difference between actually fulfilling dreams, financial dreams of like, I want to do this, I want to travel the world, blah, blah, blah. Or like, no, you didn't get there, right? By taking profits way too early. And I'll show you the public count, right? Public count, now $4 million plus portfolio, up, this is calculated by Fidelity Investments, up 186% in the past 3 years, right? Think about where the public account would be if I had sold Meta early, right? Which Meta's made me like 7 figures in profits, right? Imagine if I sold that stock after it made its first run. Palantir. Imagine if I just, cashed out a Palantir, $15, $20, something like that. Elf stock. Started buying that stock at $7. Like I could have easily sold that all my shares at, $10, $20, something like that. Tesla, Celsius, all these stocks that have been game changers for that portfolio I've been fortunate to own over the years. Imagine if I just sold them all really early on their runs and I didn't really let them do what they were supposed to do on that run, right? There's no way the public count would be $4 million portfolio today. It wouldn't be remotely close. The public count likely wouldn't even be a $3 million portfolio. The public count would likely be probably, my guess is somewhere between $1 million range and $2 million range if I had taken profits really early on the runs of those stocks. And once again, there's a big difference between like a $1.5 million portfolio and a $4 million plus portfolio. So the next question is, how do you actually know when to sell a stock and take it out of emotions of like, oh, it went up a lot, so I need to sell? Here's exactly how you do it. Let me explain this to you. You have to back your decision with mathematics. You have to back it with math. This is how you take emotions, feelings, thoughts about it's up a lot, so maybe I should take a profit. Back it with your math. So what you do is you run projections on it. I'm showing you 1000xstocks.com right now and how I run my projections. I'm showing you actual projections I have for Amazon. You run a bull case, you run a base case, and you run a bear case. If my bull case for Amazon did not look that attractive, there's no question I've got to sell Amazon right now. It's a big position for me across my portfolios. If this bull case had a low CAGR here, I would sell out of Amazon right now, every single share. But my CAGR, based upon the revenue growth I have for the company, 26 to 29, and the net income growth, I've been doing a CAGR of 25% plus likely for the stock, which is phenomenal. So Amazon doesn't make sense to sell today. When I run my base case is just a fancy way of saying this is what I expect for Amazon. I expect them to do 12% revenue growth per year on average, 2026 to 2029, 18% net income growth on average, 2026 to 2029, right? 33 to 38 P is very fair for a company growing at those sorts of growth rates. I get a CAGR here of just over 20%. I'm going to take that every time. If you can give me a CAGR of 20% or more on a base case of the company, I'm going to take it. So if I look at Amazon, this doesn't make sense for me to sell. If my CAGR on my base case is 20% or more, there's no way I'm going to sell that stock. There's no way. And even when I run my bear case on Amazon, I'm still getting a double-digit CAGR on this stock. So I could say, well, Amazon's gone up a lot the last 6 months or something like that, right? It's irrelevant. It's irrelevant how much it's gone up or down the last 6 months, 6 years, blah, blah, blah. All that matters is when I run my numbers, the numbers say I'm going to get a CAGR that's likely way above what the market's going to produce. Amazon should significantly, not like a little, significantly outperform the S&P 500 over the next 4 to 5 years. And it shouldn't even be close. And so it doesn't make sense to sell a stock. And that's what you got to do with every single stock out there, right? Now, let's look at a stock that I've taken a lot of profits on here in 2025, right? That's Palantir. I've taken immense hundreds and hundreds of thousands of dollars of profits in Palantir this year, right? Why? Why would I take profits on Palantir? Well, the numbers, the math shows me it makes sense for me to take profits on Palantir. Here's why. I'm showing you my bull case for Palantir. My bull case, this is really bullish in my opinion, but my bull case has them doing 40% revenue growth per year, 2026 to 2029 on average. 50% net income growth on average from my bull case, right? Getting to 42% net income margins in 2029. Having them at 120 to 140 PE, that gives me a great CAGR. The problem is my bull case is not what I expect. My bull case is like an outlandish kind of like, let's say things go all better than I expect. This is how I see it playing out. So if this plays out, I'm in the wrong for cashing shares in 2025. I'll look back with regrets, right? But I won't, and I'll explain that in just a moment, okay? Here's my base case. Here's what I actually expect for Palantir to do for their numbers, 2026 to 2029, and where the stock price goes. Here it is. This is a no bueno situation. So Palantir, revenue growth 40% in 2026. I think that's very doable. I think they can do that number. 2027, it goes down a little bit to 38%. Now down to 35% in 2028, and then 30% revenue growth in 2029. Keep in mind, these are amazing numbers. These are historic numbers. Almost no one can put up these sorts of growth rates Palantir should likely put up under my base case for the next 4 years. And then doing 50% net income growth, followed by 40% the next year, 38% the next year, and 35% the next year. And then getting a net income margins of 37%, which is top tier. 85 to 100 PE, which is very high, but not for a company that's trading at those sorts of rates. It's kind of to be expected. And I get a very low single digit CAGR in regards to the situation. So this is what I expect for Palantir. This is why it makes sense for me to cash shares. So if Palantir goes through its bull case, I'll look back with no regrets. If this stock doubles up and goes to $400 by 2029, I won't look back with regrets and be like, oh man, should have held Palantir. Because I run my numbers. My numbers say, it's time to cash some shares here, sir. So I go cash some shares, right? And if I'm wrong in like the bull case is what plays out, I can live with myself at night. I can look at myself in the mirror and say, dude, like they just happen to do dramatically better than I ever anticipated, and that's fine. Sometimes a company, you gotta understand, being an individual stock picker like I am, right, running your own portfolio, sometimes things are gonna go way better than you ever anticipated, and you have to be okay with that. Sometimes things are gonna go way worse than you ever anticipated, and you have to be okay with that. That's fine. It's part of this game. You're never gonna get them all right, right? The moral of the story is when you run that base case, if the CAGR is not there for the next 4 or 5 years, you have to say, makes sense for me to cash my shares, right? So regardless of what happens with Palantir, I will be happy I cash shares in 2025, right? If it goes to $500, it's fine. It's cool, right? Now, of course, I still have some Palantir exposure. We all know that, right? But the moral of the story is here, the numbers, it just doesn't make sense for me to hold all those shares. It makes sense for me to cash, right? Because there's a lot of other stocks I'm running my base case on, and they're giving me CAGRs of 20+%. Amazon was one of them. I just showed you my base case for Amazon. Amazon, I should likely get a CAGR of 20%, if not over 20%, over the next 4 years. I don't have that happening for Palantir. I have a single-digit return, which is likely worse than probably the S&P 500 will produce, right? So I hope you guys got a lot of value out of that portion right there, okay? Second subject up here. Why does a correction not come when everybody wants the correction, right? And everybody's talking about it, those sorts of things, right? And then we'll get into AMD. So I did a poll on my X page. My X page is always linked in the description if you guys want to follow me on X, okay? Post a lot of stuff on there almost on a daily basis, okay? And I did a poll last night. Over 4,000 people voted on this poll. I said, will the market be red or green this week? I mean, it was overwhelming. People voted green. Like almost 70% voted the market's going to be green this week, right? So retail remains bullish on the market overall. Definitely remains bullish. Then, I showed something like this, right? And this was, woo! So this shows you 1987. Worst day to talk about in the stock market history, S&P 500 down 20%. Why can we not get that nowadays? Why can't we have the stock market go down 20+% in a day, right? You understand it's so hard to scare people nowadays in regards to investors in the market. So hard. Let me give you an example of how incredibly difficult it is to really cause panic in the stock market nowadays, okay? This was in the Rona crash. Keep in mind, let me take you back to March of 2020, right? There was talk about the worldwide economy is going to be closed for 3 years. There's talk that even the strongest companies are going to go bankrupt. There was talk about we're going to have a depression, an economic depression in this country, much more severe than the Great Depression. Bread lines, soup lines, like on steroids. There was talk that, this was going to make the great financial crisis look like a little something, right? With that much insane fear out there, and by the way, that was justified fear. That was real talk. Like we're going to shut down the global economy for 3 years. How can you make it through that? How can any company make it through that, right? Like shut down the global economy, like shut down travel, everything for 3 years. There was real fear. It wasn't like that was just, And yet, what happened? The S&P 500 had its fastest stock market crash ever. Went down 34%. 34%? And we were talking about this was going to be the Great Depression, but way worse. And all we got was 34% decline. The market should have been down 60, 70, 80%. Like easily 60, 70, 80%. And all we had was a 34% drop we had to show for it, which is severe, but not considering how insane that situation was when you were in it at that particular time, right? Like we didn't even know like how deadly it was. Like people thought like, holy smokes, like people were assuming like we were going to lose a massive percentage of the population potentially. Not just in the United States, but around the world. And yet, that's all you had to show for it, 34% decline and then right back up. Then we had 2022. S&P 500 goes down 25%. Big down move from the peak of the fourth quarter of 2021 to the bottom of the fourth quarter of 2022, right? 25% down in the S&P 500. But it wasn't that crazy when you think about we had out of control inflation, like the most out of control inflation we'd seen since the 1980s, right? We had the Fed raising rates at the fastest clip on a percentage basis we've ever seen. And we had Russia-Ukraine start. With those three severe things all happening simultaneously, you would have thought, and coming off of a super out of control bullish market and the stimulus and everything like that, you would have thought we would have got more than a 25% down move. But that's all it ended up being, 25%, and then we went straight back up, right? You've got to understand what happened in 2008 has changed everything forever. The government used to not be in this like bailout mode. The Federal Reserve used to not be in this like bailout mode. But once 2008 happened, because it was so severe, and we're talking about almost the entire banking system collapsed essentially in the United States of America, and much of it did, right? That changed everything forever. Because then the government and the Federal Reserve realized we can basically backstop this, right? So they did TARP and they did all these other actions, quantitative easing and lowered interest rates down to nothing and all these things that people thought would never happen, and they did it, right? And that changed everything forever. Because from that moment on, now anytime something crazy happens, the government's ready to step in, the Federal Reserve's ready to step in, do whatever it takes to rescue the market. And we had a great test of this. So anybody that thought like maybe they're not going to do that anymore, 2020 was a great test of this. Obviously, everything starts shutting down. Oh my gosh, it's the end of the world, right? And what happens? The Federal Reserve backstops everything. They take interest rates down to zero. They do quantitative, unlimited quantitative easing. The government starts sending out stimulus checks, right? They're like, oh, if you don't want to pay your rent, you don't have to pay your rent. We'll backstop that. Like that was a whole situation. And that was proof that everything changed forever, which is why it's so hard to get, I would say it's very, very difficult since '08 to really get those severe crashes now at this point in time, right? Now, additionally, people understand the math in regards to this better than ever, right? The stats are all out there. You can access them anytime you want. In regards to the situation, if you look, the S&P 500 has logged corrections, a decline of 10% or more 56 times since 1929, right? Only 22 of those times, the market went into actually a bear market. The majority of the time, when you get a 10% decline, you're not going into a bear market. 34 of those times, it did not go into a bear market. So even if you get a 10% decline, the overwhelming majority is we're not actually going to go into a bear market in this situation, which makes investors say, I don't really need to be that fearful of this whole situation, right? Fascinating. Now, this does make the market more volatile. If you look at the stock market the past 30 years, it is more volatile, right? But here's where the exciting part comes in to everybody watching this video right now. Okay, listen. A more volatile stock market, you might think that's scarier. Listen, a more volatile stock market means there's way more money to be made. It's going to mean you're going to get more of these pullbacks, corrections randomly, right? And then snapback rallies, which means there's going to be more money to be made. If you know how to invest properly, there's more money to be made than ever before. Because if you know when to position into calls or puts, that's a tremendous opportunity, right? But you don't have to take it all there. You can just be a long-term investor, and you know when to, okay, market's getting a little frothy, forward P's are high, let me start cashing up a little bit. My stocks, this stock aren't going to produce me that great of CAGRs the next few years. Let's take a little profit, so you build your cash balance up, right? Then you get that volatility in the market. Something happens, something breaks, somebody gets scared. Boom, all of a sudden, next thing you know, 10, 20% down on the market quick. And you're able to then get stocks. You got to understand, for individual stocks, you get the market down 15%. There's going to be countless growth stocks down 30 to 50% on a 15% decline in the S&P 500. Volatility spikes massively. You're able then to come in, step in, buy those stocks, and the recovery of those stocks can be severe on the other side as well, right? Where they just blast off. That's exactly what we saw in 2022. A lot of people didn't think, when Meta went under 100, when you had Palantir down to $6, when you had Shopify down to 25, when you had Netflix down to $170, right? By the way, Netflix is like $1,200 now. When you had all that happening, people thought like these stocks they're going to take a long time to recover like this, right? It was suddenly like a year later, and a lot of these stocks had already recovered to near previous levels. And now you look at them and like, oh my gosh, like They're up dramatically. A lot of them have 4x, 5x, 6x, 10x. Look at nvidia, for instance, right? AMD was $55 in that 2022 crash at the lows, right? AMD's pushing close to $250 now. I mean, my gosh, like think about that for a moment. So understand the fact that the market's more volatile, it actually produces a much better probabilities of you making life-changing money in the stock market if you know the way to play this game on a high level, right? Now, additionally, another reason it's hard to get the market down, it has to do with margin, right? Because you could look at the market and be like, okay, it's trading rich right now. Who's to say retail's not going to come in, or whoever's going to come in and actually start margining out things, right? Which sends the market up even higher, right? Now, we know eventually that comes crashing down. You get a deleveraging of the stock market, right? Stock market goes down a bunch. You get a bunch of margin calls on folks, and the people that are on margin that were partying eventually get hammered hard. That's why you don't want to mess with margin. That's why I don't want to mess with margin. But you got to understand, like, there's a lot of people in a time period like we're in that have been playing margin. There's no debating that, right? Which just sends the market higher and higher, and a lot of these stocks higher and higher. And eventually, they have to pay the price for that. But you never know when the price is going to be paid. Like, that could be paid a month from now. That could be paid a week from now. That could be paid a year from now. At some point, there's going to be a price to pay for all that margin, but we don't know exactly when that is, right? And between that time and this time, like, who knows what can happen with the market? It could go up dramatically. You don't know, right? Additionally, I saw this on CNBC here today. I had to take a picture of this for you guys. They had a typo here. They said 2015, but it's supposed to say 2025. But now retail investors make up over 20% of the trading volume on a daily basis, right? And then high frequency funds also significant. So high frequency funds, like, they're not even really looking at the macroeconomic picture or government shutdowns or things like that, right? So that definitely changes the market dynamic. It's changed forever in a monumental way, right? And I don't see that changing. I mean, retail is going to be a huge component of the market, even probably bigger and bigger for, I would say, the next 10, 20, 30 years, right? Now, additionally, why is it hard to get the market down? Look at this. Look at this, ladies and gentlemen. This $7 trillion plus chilling on the sideline. And this is, I mean, at the end of the day, you get a drop in the market and there's just always money to buy it because there's so much money sitting over there in T-bills right now, sitting over there in savings accounts, checking accounts, all that sort of stuff, right? Just sitting around. Even myself, for example, I have over $1 million of cash right now. And I don't mean literally cash. I just mean money in either savings accounts, CD accounts, treasuries, things like that, right? Just sitting over $1 million. I was talking with a friend this weekend. He said he has over $5 million. Over $5 million just sitting around right now. He can't wait for a crash. He's like, I can't wait. And he's not the only one. I know a lot of people that have a ton of money in treasuries, savings accounts, CDs, that are just waiting. They're like, can this market crash? Because they just want to buy in so bad. Some of them, it's like they just want the S&P 500 to go down 20%. Some, it's 10%. Some, they want a 30% plus drop. But the issue is, it gets tough to get that 30% drop in the S&P 500 because you got a bunch of dudes loaded up on cash that even if you get a 10% drop, they're ready to come in. And you got other dudes out there that are ready to jump in at a 5% correction. You got other dudes that are out there that are 2% correction, like, I'm ready to funnel money into this market. And that's another reason it's hard to get this market down, even with a lot of bad news and worries about this and worries about that, because there's just a disgusting amount of money that is just waiting to buy every dip in sight, right? Now, additionally, one of the biggest money sucks out of the stock market over time is real estate. Like, there's no debating that, right? Like, think of a high net worth individual. High net worth individuals, what do they do a lot of times? They will buy homes cash. They won't even take out a loan on it. So, you know, somebody that has a $50 million net worth, they want to buy that $7 million house over there, they'll go buy cash. And a lot of times they'll sell stocks, or they could take it out of treasuries or CD accounts, things like that. But a lot of times they'll sell stocks. They might have a significant portion of the S&P 500. So they say, okay, I'm going to take, $10 million sale here, right? Pay my taxes on that. Now I have $7 ready to go ahead and invest that into this house, right? And just own it outright. Additionally, regular folks, average folks, also have a similar phenomenon, but they won't buy a house cash, but they will put down their 5%, 10%, 20%. 20% is pretty customary. And where does that money come from a lot of times for folks? It comes from the stock market. They might have money invested in the S&P 500 index fund, or they haven't invested in individual stocks, and maybe they have, $700,000 invested, but they need $150,000 for a down payment on that house. to meet their 20%, so they go ahead and sell out of $150,000 of stocks. But we don't have any of that going on in the market right now because no one's buying real estate. Real estate market is dead, and it's not like it just went dead. It's been dead for years now. It's been dead ever since 2023, right? It started to die in 2022, but 2023, 2024, 2025, it's been completely dead. Like ridiculous. Like the numbers have been worse than at the trough of the Rona crash. Like that's how insane this is, right? So it's been dead for years. No one's spending on real estate. So where's money have to go? Well, it goes into T-bills or it goes into savings accounts or it goes in where? The stock market. Usually money you would put into real estate, you put in the stock market, right? And that leads me to myself and my situation. I say, I'm either really genius or really dumb. I'm building a house right now. I'm building a house right now overlooking the whole city. And we'll see. Like, that house is going to be done in 2026 at some point in time. But I like to look at assets when no one's looking at assets. And something I think is interesting is no one's paid attention to real estate for years now. Years, right? And so I got a house that'll be built next year, right? And we'll see, where that appreciates or depreciates or stagnates over the next 5 years after that. We'll see what happens to that home's value 2026 to 2031. We'll see. But I like to look at assets when no one's looking at assets, right? Additionally, I was even looking at this. People always talk about, Las Vegas real estate's so expensive, it's so out of control, right? I was looking at this. I was like, how much has it actually gone up over the past 20 years? And it was like a 65% rise over the past 20 years. Meanwhile, the average income, per capita has gone up 234%. That's intriguing, right? Intriguing. And the California money that's always moving here. We was at an event just a few weeks ago with a bunch of high net worth individuals, here in Vegas that had all built like custom homes. And almost everybody I met was from California. We always have like an unlimited supply of rich Californians constantly moving to Vegas. People that live in LA, San Diego, San Francisco, the Northern California, they're always moving to Vegas because they get the tax break here, right? No state income taxes. So it can save them hundreds of thousands of dollars a year, if not millions of dollars a year, right? So they say, I want to live still close because we're a 45-minute flight from LA, 45-minute flight to San Diego, a 4-hour car drive to LA, 4-hour car drive to San Diego, and an hour, 15-minute flight to Northern California, up to San Francisco or that whole Bay Area, right? So they say, you know what, I'll move out to Vegas and weather's nice, can maybe still have a second home out in California, and that's just what happens, man. It happens all the time. Another good example of this is silver. I started buying silver bars at the end of 2021 because I understood like, hey, there's this demand that's going to get much bigger over time. It's also a hedge against inflation. Obviously, I was already noticing inflation was going crazy in 2021, right? So I started buying silver bars. Random thing for me to buy, but since that time, silver has gone up, well over doubled up since then, right? And you look at the S&P 500, it hasn't. So if you say silver in the Q4 2021 versus now, and you say the S&P 500, silver is actually significantly outperformed the S&P 500, and that's something you wouldn't usually expect. But it was a freak situation. No one had been paying attention to silver for the longest time. I came in and I was like, I'm going to start buying some big silver bars. And I did that. And, here it is. Sometimes you got to look at assets when other people aren't looking at them, right? Now, that's why it's so hard to get this market to come down when everybody wants it to come down, man. It's so dang difficult. There's so much cash out there. It's just, it goes down a little bit and people are like, I got to buy, right? It's crazy, man, but it is what it is. At some point, that phenomenon will break, but it's hard to break it, right? We got to get rid of a few trillion of that dollars, and then maybe we can talk. AMD. So, AMD, some severe changes going on with AMD. I want to explain what's going on here, why the stock's seeing so much momentum, people taking profits too early, those sorts of things, right? The way I'll put it to you like this, okay? We don't know what's behind the curtain right now. We know, like, Lisa Su's back here, right? The financial statements are back here, and we know it's going to be great. We know the next several years are going to be great in terms of AMD numbers. There's no debating that anymore at this point in time. That might have been a debate some people were engaging in 6 months ago, 12 months ago, 18 months ago, but that's no longer, like now we're seeing the deals with OpenAI, with Oracle, all these others, right? Meta relationship, Tesla relationship, all these companies. We now know AMD's numbers are going to be a banger for the next several years. We just don't know how great, right? That's the thing. We know it's going to be great. When those curtains open, it's going to be great. We just don't know how great. And it's one of the most exciting times to be investing in a stock when they're about to open the curtains and you know it's going to be great. You just don't know how great it's going to be, right? Let me show you my AMD projections here, okay? This is my bull case I have for AMD. This is if things go better than I expect. I've been doing 40% revenue growth per year for the next 4 years, 2026 to 2029, right? And 50% net income growth, that puts them at net income margins of 22%, which is less than half of NVIDIA's. The stock goes to $1,000 by 2029. $1,000. What if hypothetically those numbers are too conservative? It's something you have to consider. These growth rates wouldn't even be remotely close to the growth rates NVIDIA started to report. NVIDIA started to report 100 and 200% type revenue growth rates. This isn't even in the same ballpark. NVIDIA can post like 40, 50% net income margins, right? I have their best case scenario that net income margins only getting to 22%. 22%, and the stock goes to $1,000. What if that case is low? It's something you've got to consider. This is what I actually expect AMD to do, right? This is my base case for the company. 35% revenue growth per year, 2026 through 2029. 45% net income growth per year on average, 2026 to 2029. Net income margins, once again, 22%. If you're growing at those sorts of growth rates, 50 to 60 P is very fair. That puts the stock somewhere between, we can call it about $750 in low 900s come 2029, which gives me a CAGR of, we can call it 30s to 40%. Woo! What if that's low? It's possible. It's very possible that those numbers end up being low. And the net income margins I have here at 22% come 2029 are laughable. And the revenue growth of 35% on average is laughable. That's very possible, right? And so you got to understand, you do not want to sell a stock. Like, why am I couldn't even consider selling one share in the public count of AMD right now. I got, 2,555 shares or something in there. I couldn't even consider selling one share right now because I don't know what's back there. I just know it's great. I just don't know if this revenue growth is going to be 30% a year for the next several years, 40%, 50%, 60%. But if it's 40% plus on average, this stock could run to 1,000. And I'm not going to look to get out of a stock at 200 or something when it might be on a run to 1,000 over the next 3 or 4 years, right? So this is not a moment you want to cash a stock like AMD. This is a moment you want to hold every share as tight as you possibly can. And there's a reason people keep buying in the stock in a relentless manner day after day. Remember, we haven't even started seeing numbers yet. We're just going to start getting a glimpse of behind the curtain when they report their numbers, in about a week from now, right? They'll give us a first glimpse of like what is actually going on with AMD, right? And we'll get to see the numbers, the guidance. That's just a glimpse. And that's going to give you some intel on like, oh shoot, things might actually be better than we anticipate. And remember, the 400 series, that's next year's story. So the numbers, whatever you're seeing this year is going to be kind of a joke compared to what you're going to see next year and in 2027. So keep that in mind, folks. Like we got a long game to play out here in regards to AMD, right? Now you might ask yourself, well, what if the market corrects Q4, Q1, which is fair. Like that might happen, right? We might get a correction this quarter or next quarter, right? Like that's going to pull down all stocks. If that happens, that's no guarantee, but if that happens, it's a realistic possibility. Who cares? Who cares? Like, okay, let's say AMD goes to 275, then we get a correction in the market and it falls to 225. Oh, wow. I'm not going to try to create a taxable event and try to worry about getting back in at the right time for a stock that's probably on the runway to $500 to $1,000 a share. No. I'm not going to say, okay, stock goes 275, I'm going to cash. Then hopefully the market goes down, brings AMD down to 225. I'm going to get back in AMD, get $50 of arbitrage per share, then ride it up to 500 to 1,000. No. Because I don't know. Like, what if we don't get a correction in this quarter or next quarter? And AMD just keeps running. And next thing you know, that stock's 300, 400. Then next year it hits 500, right? And then over the next few years, it ends up eventually reaching 1,000. I'm not going to play that whole game of, with long-term investments, you just let it play out, okay? And then once again, at some point in time, AMD will get to a price where it will make sense for me to start taking profits. But it's not even close to being there. It's not even close to being there yet. I mean, when I run my base case and I'm still at 30 and 40% CAGRs, it's not close. We're not even close to the stage where I start to take profits. This stock runs to 500, then I can start a 400 to 500 range. Then I could start making a case of maybe it makes sense to maybe take some profits here and there. But that will depend upon growth rates. What if by that time AMD is starting to report 50, 60, 70% revenue growth? Well, shoot. Then it won't make sense because then AMD is probably going 1,000 plus. That's, you got to run the math. When you run the math, then you can start to figure out, okay, it makes sense to take profits or not, right? And AMD's at a big inflection point in their business for the next several years. So we don't even know exactly what the math is going to be, but we just know it's going to be dramatically higher than where we're at right now, right? Alrighty, guys, I hope you enjoyed today's video. I hope you appreciate these videos I produce for you guys at least a few times a week here on the main channel. I really hope you enjoyed it. Additionally, if you want to learn from me on a much deeper level, pinned comment down there is to apply to join my private stock group, private wealth group. Get access to thousandxstocks.com, all this stuff so you can take you up to a much higher level. And once again, especially you need to get in there if you're under $100,000 net worth, because starting January, everybody that joins in there is going to have bare minimum $100,000 net worth. Much love and have a great day.